Hi everybody, it's Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at how yesterday, which was Friday the 15th of January, unfolded on the USE Minis. I wanted to have a look at this particularly because it was a hard day, and I think there's just too many software vendors always show good, easy trades, and there's not enough videos shown on the harder days of trading. And for anyone who's been in the market for any period of time will know that the markets are not that easy all the time. There will be harder days, there will be days when you're not quite sure what's going on, and obviously there will be losing days. So I wanted to have a look at this because quite frankly Friday was quite a hard day. So let's have a look at the ES to start with. This is what we call the BOSS because it's the index of the largest baskets of shares, 500. Remember, for more experienced users, we no longer use the STF color. For trend, we want to have an indicator that can be on our charts in advance. In other words, gives us a leading indication of support or resistance. For this, we go to the higher time frame chart, and as such, we look to time frames between 3 and 5 time frames higher than we're trading. So for a 3-minute chart, we'd go out to the 15-minute chart. So how do we put these on our chart? Well, we use these off prior swing highs and lows. So the previous low would have been the low on the 14th of January, the day before, which would have been here. So if I just go back and I jump back to, let's say, even before the market even opened. Let's have a look at this. This is the before the market even opened on Friday. So you go back to the prior pivot low, which is here. You right mouse click, you do decision point off the menu, and that gives you an area of potential support. Now can you see that's on the chart in advance, even before Friday even opened? If I turn training mode off, let's see what happened. Well, the market came down. It came down right at the start and started to rally. So in other words, it started to find support. Therefore, the large degree trend would be deemed to be up. Can you see that? 15-minute support, large degree trend up. I also want to see what happened a bit later here because the market rolled over, and then here it then also found support. It just dipped below ever so slightly, but didn't go below the DP level much. In fact, we did not make 2 consecutive closes, which is my normal guideline for a DP continuation. So here the support was still valid, and the large degree trend was then deemed to be up. So can you all see that? Right, so what does that mean on our 3-minute chart? Well, if we go back to our 3-minute chart, it means that basically the large degree trend was up from pretty much the start of the day. So of course this TS3 sell was against the new uptrend and therefore should have been avoided. If I place the normal analysis on, you can see it wouldn't have actually reached its first target anyway, so it would have been a hard one to manage if you were short. So large degree trend is up, therefore you'd avoided this. There would have been a buy setup here. You can see on that TS4 buy setup, you'd have probably taken that one. So that would have actually been a losing trade. You see it rolled back over again. Remember, losing trades can, will, and do happen. I'll say that again. Losing trades can, will, and do happen when you're trading. The trick is keeping the losses small, and that's why we use correct position sizing to keep our initial risks small and under control. In this case, less than 2% of a sample $20,000 account. So what does that now mean for these TS3 and TS2 sell setups here later in the day? Well, these also were coming off a DP support, so the DP would have turned the large degree trend up. So again, you'd have probably been avoiding these, or at the very least be wary about them and not taking them. So can you see how, looking at this and seeing potential short trades, then the support would have probably turned that into looking for potential long trades, so we would have been avoiding these losing trades. Also, because the market's been quite choppy recently, it was actually a very choppy sideways day yesterday, so it was actually a very hard day to actually work with. So that would have been the ES, 15-minute support with potentially one losing trade there, but these other sell setups would have been avoided. Let's have a look at the NQ. Here I've already put the 15-minute support on, and you can see that caught the low of the day absolutely perfectly. On the NQ, market was going down, hadn't reached this 15-minute support, therefore you would not be taking these buy setups, so that would have avoided that one, and actually would have avoided that one as well that you would have taken on the ES. Support came in perfectly here on the low, market started to rally up, therefore you'd have avoided these. The hard one was the NQ, sorry, not the NQ, the YM. The reason being is if I put the 15-minute support on the YM was actually the weaker market. So if I put this 15-minute support on, can you see how it actually gave support earlier in the day, but it actually broke it quite convincingly later on. Now this is one of those cases where, as the more experienced user, you have to make a decision. Why? Because on your YM chart in isolation, this was breached and largely trend looked like it was down. So therefore, if you're looking to take your sell setups later in the day here, they would still be valid sell setups, and you'd probably have taken them, and you'd probably had a few losing trades. However, that was just looking at the YM in isolation. Remember, the YM is only a basket of 30 shares, Nasdaq is 100, ES is 500. So this is why we look to look at all of the E-minis together. In other words, be very wary if one market is out of sync with the others, particularly the YM. So can you see that if you were looking at the YM was still looking to be going down, but the NQ had good support and was looking to go up, and the ES was also the largely trend up, you should be very wary about taking shorts on your YM. So this is where experience comes in, and also why I believe that or I'm so against automated trading, because automated trading would just look at the YM, just take the trades on that without any consideration for the other markets. So this is where experience comes in, and when you've got the markets not in sync and not telling you the same thing, you need to be more cautious. So that was the word of or sort of the advice for trading on Friday, is that the largely trend on the ES was up, so you're avoiding the sell setups. The largely trend later in the day on the NQ was definitely up, therefore again avoiding the sell setups. On the YM, it was dubious at this particular point in time in isolation on the YM, but because we look at all the three E-minis together, because we know they are correlated, you would have to be a little bit more cautious. So again, the more cautious trader would probably avoid these. So to sum up, I think yesterday, which was the 15th, was actually quite a hard day on the YM in particular, because it wasn't basically in sync with the other markets. The alarm bells should have been ringing when you had 15-minute support on the ES coming in around midday, and particularly on the NQ, as we've seen. If I go back to the 3-minute chart, the NQ support was beautiful and nailed the low of the day absolutely perfectly. So the summary of this video today is just to remind you that there will be hard days in trading, just to remind you that there will be losing days, and everything is not quite as simple and straightforward as some other software vendors would like you to portray. Basically, the markets go in cycles. They go through times when you have good clear signals, you have good clear patterns, and trading is relatively straightforward. They have times when the markets are quite frankly very hard, where the markets or the market pattern is confusing, unclear, particularly the larger trend is unclear, and that's time when the more cautious traders or less experienced traders should either stand aside or wait for the market to become more clear. And then there are times when you have losing trades. It's all about the markets going in cycles, what I call the cyclical nature of trading. So I wanted to do this video today just to show you that there are hard days when, quite frankly, it is quite tricky being a trader. MTPredictor did its job in hopefully showing you the support on the 15-minute ES and the NQ, as we've already seen, and even if you had losing trades, would have kept those losses small, as we saw on the ES long trade there. So yes, there will be losing days, yes there will be hard days, but there also will be good days as well. The trick is keeping the losses small on the losing days, trying to avoid trading on the harder days to save yourself ready to make the best when you do get the good clear days, and they will come through because the markets go in cycles. So hopefully this has been a good video to show you that yes, there are harder days in trading, and the trick is doing your best to keep your losses small throughout those harder days. And that's what MTPredictor is designed to do.